Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. All right, guys, welcome back to yet another episode. Hamish, how you going, mate?
I'm doing well. Did you see what happened in the markets last night? I just woke up and it's been a while since I saw a day that. It's been
what happened?
It's been a big red day, particularly for tech stocks, which we'll talk a little bit about more once we get into the podcast. But yeah, ouch. Particularly for the Magnificent Seven, it's been a rough day. After, of course, having an insane year, really, over the past, I guess, 12 months. The Mag 7 has just been going up.
I'm looking at the NASDAQ 100. And it's down 4.5%.
Yep.
Well, that's over the 5-day. But yeah, 3.65% just today. So wow, that's it's taken a dive. Interesting.
Yeah.
Bit of a tech sell-off going on, Hamish. Bit of a tech sell-off.
Yeah. And as I said, we'll talk a little bit more about that as we get into the episode. But what's new in your world?
What's new in my world? Went to Sydney the other day. Went to a lunch with Tash for the entertainment book, which was fun. I don't know if you remember the entertainment book.
Yeah.
Now it's the entertainment app. I totally I would have thought that would have been one of the businesses that would have died. Just with the guess the digitization of everything, but somehow it still exists, and they've been around for 30 years. So now we went along to their lunch, and it was a good time.
Yeah, that's crazy. 30 years, because I guess is Groupon is basically the same thing, right? It's like the online version of what they used to do in the book.
I'm not exactly sure, but it sounds like it.
It sounds appropriate. So yeah, it is surprising that they were able to, well, at least they were able to transition it into an app. 30 years, pretty impressive.
Yeah.
There you go.
Yeah, they're actually doing all right. What have you been up to, Hamish?
Not a lot. Just following all of the crazy news that's been going on. I feel I almost don't want to mention this because it's turning into a politics podcast. But of course, Joe Biden stepped down as well.
Yep.
So yeah, the last 2 weeks for US politics has just been crazy. So watching a little bit of that, and
you're not wrong.
Yeah.
Politics with Hamish.
Let's not turn this into a politics podcast.
No, please tell me more. What do you think about that, Hamish? Yeah. What do you think about Biden stepping down?
Yeah. No opinions here.
It'll be interesting to see who, if they run with Kamala Harris, or whether they and how the polls go, and whether they stick with her through to the end or sub her out, or it's going to get wild. Well, it's going to be a good season this time around, isn't it? First couple episodes, absolute bangers.
Yeah. Season 47.
Yeah, exactly. All right, what else are we talking about today, Hamish? What else have you got to cover?
Well, so I'll talk a little bit more broadly about the tech sell-off, and then we'll get into a couple of earnings that we had out of the tech sector this week. Google and Tesla. I guess Tesla is a tech company. They're basically a tech company. So we'll talk about Google and Tesla. What have you got?
We got to talk about the CrowdStrike Microsoft collab. Ended in disaster, which is quite. I don't know. And I also want to talk a little bit about the Olympics, particularly ticket sales, because maybe not what you might expect when it comes to Paris Olympics ticket sales. So lots to talk about today. Let's get stuck into it.
Yeah, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days.
All right, Hamish, tell me about this tech sell-off. What's happening?
Yeah, so this literally just happened overnight for us as we kind of record this on a Thursday. That's always the fun of being in Australia, right? We you wake up in the morning and see what the US markets have been doing rather than sweating throughout the day. Like if this was happening during the day, it would be a completely different story. But yeah, so in terms of the big indices, the NASDAQ was the worst performer of the day, down 3.6%, which is actually the worst day that it's had since December 2022. So December 2020, late 2022 was when the NASDAQ kind of had its little correction or crash, I guess you would say. So yeah, it's been a while since the market has had such a bad day. The rest of the market was also down pretty considerably. The S&P 500 also dropped 2.3%, which is a very pretty significant move. And as you might expect, what's driving the NASDAQ down? Well, it's the Magnificent Seven. Also the S&P 500 as well. But there's such a concentrated part of the US financial markets now that if there's a meaningful drop in some of these Mag 7 companies, it can really pull the market down. So Google was down 5% on reporting its earnings, which we'll talk a little bit more about later. Tesla was down 12% on earnings as well. Again, we'll talk about it later. Meta didn't even report earnings and they fell 5%. That's a massive move.
That's great.
Probably off the back of some of Google's results. Nvidia was the worst of the Mag 7, or sorry, not the worst, the second worst of the Mag 7, down 7%. And then Microsoft and Apple fared best. Apple was down 2.5%, Microsoft down 3.5%.
Right.
And combined...
Interesting. Are we starting to see the turnaround of the Magnificent Seven? They could do no wrong up until now, Hamish.
I know.
Is this maybe the start of them coming back down to earth? We shall see.
Yeah, we will see. Combined, I just wanted to say, the Mag 7 yesterday, or at least on this one day, whenever you're listening to this, lost $800 billion in value. So,
wow.
Yeah, it was a tough day. But yeah, you're right. Throughout this year, particularly with all of the AI hype, the big tech stocks have gotten all of the attention from investors. And with more than 30% of the S&P 500, the S&P 500's value coming from the Mag 7 companies, it's no surprise, how the S&P has performed this year. I just took a look at the first half year performance of the S&P, up 15%, which is a crazy kind of half year. But interestingly, at the same time, and this is something I'll admit I hadn't looked at very closely up until the last week or so. But at the same time as the S&P, so the big large cap companies doing really well this year, driven by kind of this AI hype, you had small cap companies that have really, really struggled. So off the back of high inflation and high, interest rates potentially staying higher for longer, particularly small cap companies that have a higher debt burden than larger companies. It's been a tough year. So there's an index called the Russell 2000, which tracks all of the small cap companies in the US. In the first half of the year, it was up just 0.8%, which is a pretty significant, divergence from the large cap companies. So you have large cap companies, the S&P up 15% in the first half of the year. Small caps up just 0.8%. So up until kind of a couple of weeks ago, there was this kind of massive divergence, and that seems to be starting to shift. So kind of starting a couple of weeks ago with the June CPI report, the small cap stocks are starting to get a little bit of love. It looks like particularly institutional investors are starting to rotate out of the big tech companies and into the small cap companies. So I think we spoke about the inflation data. I think it was last week or maybe the week before, and it was very good. You had headline inflation at 3%, and the inflation in June was actually negative, so it was actually deflation. And so again, particularly for small cap companies that have these kind of higher debt burdens and a little bit more sensitive to interest rate changes, it's certainly very positive news. And so how that relates to kind of what's happening today, it seems like what's happened today in tech seems to be triggered by some of the earnings results that we'll talk about, but it also seems to be reflecting this more broader shift that's been happening, where you have institutional investors kind of moving out of the big AI tech hype companies and into the smaller cap companies. And so if you look at it's quite a funny comparison. If you look at the S&P 500 and the Russell 2000 index, the Russell 2000 this year has basically been flat, and then in the last 2 weeks, it's gained like 10%, I think, or something like that. So and has caught up essentially to the S&P 500.
At the same time where the NASDAQ has been falling.
Exactly. Yes. And to put this in perspective, the Russell 2000, so it's all of the small cap companies, it has the total value of it is about $3 trillion. And so even though it's an entire index of all of the small cap companies, 2,000 small cap companies, its entire value is smaller than Microsoft and Apple individually. So it only takes a small amount of money coming out of the S&P to go into the small caps for there to be a considerable increase in the value of the Russell 2000. So even though it's all of the small cap companies, it's smaller than just Microsoft or just Apple.
That really gives you perspective as to how concentrated the S&P 500 or the NASDAQ 100 really is in those top 7.
Yeah,
I think they account for something like 30% of the S&P 500 now, just those 7 stocks, which is just wild.
Yep.
But yeah, that's certainly crazy. That this 10% rise in the Russell 2000 probably means absolutely nothing. Well, it's shown that it has meant absolutely nothing in terms of, say, I guess a lot of those companies wouldn't be in the S&P 500, but
no.
Yeah, it's funny that overall that would have very little impact on the market, whereas what's happening at the top end has a huge impact on the market.
Yeah.
So it's almost like we wouldn't even know. We wouldn't even know unless you'd brought this up, what's happening in the small cap stocks, because they just wouldn't put a dent in anything.
No, exactly. Like, yeah, as I said, if you look at the Russell 2000 chart, it's kind of hilarious. It's like this straight line up. It looks like a crazy move. But even that 10%, even that 10% rise over 2 weeks is like 300 billion in value. And it's a massive 10% move in the Russell. Whereas, as I said today alone, the Magnificent Seven lost almost $1 trillion in value, which is like almost a third of the entire small cap market. So,
that's wild.
The scale, and looking into this really gave me a kind of a fresh perspective on, the insane concentration of the S&P. And of course, nobody knows what's going to happen. There's so many, I don't know how I would say this, like just unknown, unpredictable, and kind of volatile factors over the next few months, I think, that could influence markets. We've got the election. We don't even know who the Democratic candidate is. We don't know who's going to win. We don't know what inflation is going to do, what interest rates are going to do. There's multiple wars going on. There's so many things happening. Who knows what's going to be around the corner. But it's certainly been a shift from the very calm markets we've seen in the first half of the year.
Yeah, it is interesting, isn't it? And looking at those smaller cap companies being kind of flat, it's funny that kind of does it's funny that represents the macroeconomic conditions that we see at the moment, whereas the high-flying AI tech stocks are it seems like they're totally detached from the actual economic conditions that we're seeing.
Yes.
So it's interesting to see that, most of the market, I would say, or most companies in America are actually behaving consistently with what's happening in the macro. And it's only really that small subset of companies that are outliers that are kind of feeding from this, I guess, hype around this new technology in AI, which is quite interesting.
Yeah, it's I mean, certainly the S&P's returns, it's not any reflection of the actual economy, I think, at this point, because, you've got more than 30% of the S&P in a handful of companies that have tens of billions in cash on the balance sheet. Like, those businesses are not going anywhere. You can speculate on how well they'll do in AI, or, whether revenue growth will be 13% or 12% if you want to do that. But they're not going to be affected by a change in interest rates.
For a video I made on that real quick, I think I looked into Google and guess what, Hamish? Their interest expense now, with all that's happened, has risen to $90 million a quarter.
Wow,
that's pretty big.
That's crazy.
And then I looked at their cash and their short-term marketable securities, and it's like $120 billion just sitting there. It's like, oh my god.
So what do interest rates need to go to?
Yeah, you're right.
10,000% a month, and then maybe they'll maybe then they'll be in trouble.
So true. But yeah, it's kind of funny, isn't it? Sorry, I interrupted you there.
No, that's all I kind of had to say on that anyway.
Okay.
So yeah.
Well, let's roll on then, and let's talk about this Microsoft Crowdstrike stuff. I don't want to spend too much time on this because I think the kind of moment for this bit of news has passed, and everyone has kind of seen it play out. But we haven't spoken about it yet, Hamish. So let's talk about it at least for a little bit. Were you affected at all by the Microsoft outages? Were one of your computers, or you're all Mac, are you?
I'm all Mac at this point, so I was completely unaffected. Yeah, I got nothing to do with Microsoft. Thank you very much.
There you go. Me neither, actually. I was not affected at all. Lucky for us Mac users. I think a lot of people in the creative space use Macs because they're a little bit better for that kind of stuff. So, luckily for us, we weren't businesses that were affected. But yes, Microsoft experienced a global outage on Thursday last week due to an issue with CrowdStrike's Falcon sensor software, causing widespread disruptions and triggering the blue screen of death on Windows PCs. The outage affected services like Microsoft 365, Azure, and numerous other platforms, grounding flights and disrupting various businesses. Despite the serious impact, many users took to social media to joke about the early weekend arrival. You had to see a lot of those memes, people being like, all right, I'm done. Not being able to work.
Yeah.
I wonder if someone will do, because it's too early to kind of predict, but I wonder if someone will look back and try and figure out what the total cost, the total economic impact of that couple of days of outage would have been. Because it's like overall a small issue, and I think only 1% of Microsoft's devices were affected. But I think it'd still be a reasonably large number. And the reason they say that is because this, they say the reason why only having the 1% of Microsoft devices affected was such an important stat is because the PCs that would probably have this CrowdStrike Falcon sensor software are the ones that need to be really robust.
True.
Because they need that rigid software and that security system. So in fact, probably very important 1% of PCs were affected. And that's why you saw such that ripple effect, because important PCs were affected. But yeah, I'll be interested to see what exactly the outcome of it will be in economic terms, I guess. But yes, the article reads, Microsoft later admitted that 8.5 million devices were affected by the outage. The funniest one I saw was the Mercedes F1 team. Did you see that photo?
No.
No. It's so funny because the Mercedes pit wall, right? They're putting up their screen. You know how they put all this stuff up and take it down and between races, and they got to shift to the next location and blah, blah, blah.
Yeah.
Anyway, they just set up for the Grand Prix. They'd gotten their computers and their pit wall looking all schmick, and they were getting these blue screens of death because they were affected by the outage. But the funniest thing is there's this perfect photo of some Mercedes pit wall technicians looking at their computers being like, why? What's going on? And then you just see the sponsors on their T-shirts and right across the T-shirt, massive logo, CrowdStrike.
Too perfect.
It's like, Sometimes funny stuff. It's just
That's hilarious.
Real life is the best form of drama. I don't
yeah.
know. It's just so good.
That's the good thing about the
You
internet.
can't beat real life.
So, there's someone's gonna have a photo of something funny from every event that happens now,
Yeah.
and it's the good thing about the internet.
True. Imagine how much funny stuff was just missed before the time of phones having cameras, and there would have been. Did you guys see that? Did you wait? None of you guys weren't. Nobody saw that. Are you serious?
Yeah.
Just so many great moments would have been lost to history. Hamish.
Tragic.
But yeah, so overall, let's talk a little bit about what happened. What is Crowdstrike? What is the Falcon sensor? So Crowdstrike is a well-known cybersecurity firm, and its Falcon sensor software is designed to protect systems from cyber attacks. So on Thursday, Crowdstrike warned users about a bug related to the Falcon sensor that was causing Windows systems to crash with the blue screen of death error coming up. But despite rolling back the problematic update, many PCs remained affected. The blue screen of death errors are thrown when something critical happens to the Windows PC, and it halts all operations and obviously displays an error message. And this occurs when the system encounters a severe issue, often leading to an unexpected restart and potential data loss. But interestingly, one question I had is why did this only happen on Microsoft? Why didn't it happen also on Mac? And the reason is because Apple doesn't allow security apps to have such deep level access to the operating system. So Microsoft does allow it to have that deep level access, which is why these things can happen. Right. But I think Mac OS actually does the monitoring of its core systems, and then it lets the security software look at the results of Mac's screening of its deep systems.
Yep.
So I think that's why, whereas I think it sounds like Microsoft just gives access to the deep systems.
Right.
So yeah, very interesting as to why that actually didn't happen on Mac, because CrowdStrike didn't have that deep access. The outage had a global impact, affecting various platforms such as Microsoft 365, Azure, Amazon Web Services, and even social media sites like Instagram and eBay as well. Down Detector, which tracks online service outages, showed significant disruptions across all of these services. The issue grounded flights from airlines including Delta, United, and American Airlines in the US. Sky News experienced difficulties broadcasting, and some supermarkets faced payment processing issues, leaving customers unable to complete purchases. But it's sorry, you were going to say.
All I was going to say is I saw a photo of, I can't remember which airport it was in India. It was one of their international airports, and they were writing their boarding passes manually. I saw a photo of that. I thought that was quite funny. Crazy.
Step back a couple of decades. It was a look back to the past with their handwritten boarding passes.
Yeah. Very secure.
If you wanted to try and scam your way onto a free flight, I reckon that would have been the day to do it.
Yeah. Hand-drawn passport.
Yes, I'm 10C. Yep, that's me. Hello. Yes, I'm going to. Where's this flight going? Qatar. Yes. I'm going to Qatar. Yep. Mm-hmm.
Checks out.
Yes, so CrowdStrike has now released an update to fix the corrupt file at the center of it all. Microsoft has also released their free tool to help people recover their PCs from the issue. And the impact, Hamish, in the last week, CrowdStrike stock has fallen 30%, and Microsoft fell around 4%.
Wow.
So CrowdStrike not having a great time.
No, painful. Very, very painful. Ouch. Yeah, not a good day to be working in IT. Imagine waking up that morning. Was it a Friday? It was a Friday, right?
Thursday or Friday,
I
think. Yeah.
You're waking up, you think it's just another day at the office, and you've got to fix every computer on 7 floors.
Imagine if you're an IT person and you put in an annual leave request to have that Friday off.
Oh, yeah.
That would have been beautiful.
Great timing.
Looking back, you'd be like, oh, yes.
Yeah.
You get back on Monday and it's almost fixed. It's like, oh, this is great.
Hey, guys.
I missed that completely. Hey, I'm back. Hawaii was fantastic, actually. Yeah, really good.
Oh, dear.
Yeah, there you go, Hamish. I think it's all fixed up now, but that was very interesting. It certainly had. We talk about, in financial markets, we talk about contagion, right, and the ability of things to ripple out. And this one certainly rippled.
Yeah,
but just a short-term issue, it sounds like.
Yeah.
All right, Hamish, back over to you. Do you want to do this update? We were talking about this Google and Wiz doing this monster acquisition last week, and
Yes.
and there's been an update, has there?
Yeah, I'll talk a little bit about that, and then I'll start with the earnings. So I'll start with Google's earnings. They reported their second quarter earnings, and then and yes, we do have an update around the acquisition bid that Google made for their cybersecurity firm, not Crowdstrike, but a different one. But yeah, so thank God. That would have been a big mistake. Google tries to buy Crowdstrike. Actually,
oh my gosh! Imagine like they're trying to get the deal done with Wiz now, and they're like, maybe we should offer a little bit less.
Yeah. Maybe we don't want them. But anyway, so Google reported their second quarter earnings, and as I mentioned a little bit earlier, the stock fell. I think it was over 5% on the news, so the market was not happy. But the results weren't that bad, actually, surprisingly. In fact, they're pretty good. Revenue came in at $84.7 billion for the quarter, which was up 14% year over year. So, they're still growing at an astounding rate. And they've kind of got a number of categories now, as they've had for a while. Search came in at $48.5 billion for the quarter, up 14% year over year, which is astounding, making $50 billion a quarter from a search engine that they made a couple of decades ago is
pretty wild, isn't it?
Yeah, not too bad. YouTube revenue came in at $8.7 billion, up 13% year over year. So this is YouTube ad revenue, so it doesn't include their subscriptions as well. So just the ad revenue continues to grow. Their Google Network advertising, which is their third-party advertising on third-party websites, came in at $7.4 billion, which was actually down 5%. And I'll talk about that in a second. But in total, advertising revenue for Google came in at $64.6 billion, which was up 11% year over year. So,
all right,
they're still growing their advertising business. And yeah, all the growth is coming from search and YouTube, and their network advertising is in decline. So why is that the case? Well, we can get a bit of an insight into that by looking at Google's information that they provide on the number of clicks on these different platforms and the cost per click. So when it comes to Google search, they saw a 5% increase in clicks and an 8% increase in cost per click. So essentially more people are using Google search and advertisers are willing to pay more, hence more revenue for Google search advertising revenue. But when it comes to Google Network, they had a 15% decrease in, well, they use impressions, but it's kind of the same, gives us the same outcome. 15% decline in impressions and a 14% increase in the cost per impression. So essentially, there's just been a huge decline in how many ads are being served across third-party websites.
Interesting.
Yeah, essentially likely just reflects, a similar thing that Meta, for example, is experiencing with feed versus their reels and short form and stories, where there's just a shift in how advertisers are spending their money. Less advertising on the kind of the side banners that you see on like a news website or something. You're looking up a cupcake recipe or something, and you have like a million banner ads that are completely annoying. And a lot of people,
It's hard to actually see the cupcake recipe, and you just like boxed in by ads. It's like,
yeah.
I think, did that say flour? I can't. Crowdstrike wants to advertise. Did you know that our cybersecurity systems are flawless?
Yeah.
Oh, get rid of that one. Far out.
The worst ones. The worst ads actually on websites are the ones that like move when you scroll. They're like, they stay and they just, not only is that just annoying, but they just make the website so slow as well, especially if it's a video in the ad. Drives me crazy. But anyway, But we love ads, so I don't complain.
It's definitely not the way that we make money.
No.
We're definitely not biting the hand that's feeding us.
Could you imagine making a YouTube video though, and like through the video you've got like pop-ups coming in like just constantly, like it's a website.
Yeah.
Like it's not even an ad break.
We're going to start our own version. I'm going to start NewMoney version of Google Network.
Yeah, exactly. You've just got a banner across the bottom.
In some of my YouTube videos, I'm just going to have banners coming up the side of the frame being like, advertise your business here.
Yeah, true. Exactly. You do the billboard thing.
Yeah.
So while it looks like, it's kind of concerning that they've got kind of declining network revenue, it's just kind of representing the shift, and it's being more than made up for in their other their other resources that advertisers can run ads on. Then their other revenue sources, they have subscriptions, platforms and devices, which was $9.3 billion, up 15% year over year. And the best performing category was cloud. They passed $10 billion in quarterly revenue, up 29% year over year. Continuing to see big growth in the cloud business. On the cost side, their biggest cost is their traffic acquisition costs, which came in at $13.4 billion, which was up just 7% year over year. So again, growing revenue faster than the cost essentially to acquire that revenue, to be the default search engine on Apple devices, for example. And so their operating margin expanded from 29% to 32%, and their operating income, or their profit, came in at $27 billion, up 26% year over year. So
it's pretty tidy.
It's all pretty good, right? And so, yeah, it's kind of it's kind of the state of the market, I think, at the moment, that even if you have perfection, if the market's expecting perfection plus, you're going to see a minus 5% result. So that's what happened. Right. Regarding the Wiz deal, which we spoke about last week, I think, which is the cybersecurity firm that Google was trying to acquire for $23 billion. They've said no thanks, Google. They said we're gonna IPO. We're just gonna go public. Which again, in the context of all of this tech euphoria and sell-off that we're talking about, a reminder from the story last week: they have $1 billion in annual revenue, and they're turning down a $23 billion offer, which means they think that they can IPO at a value pretty considerably above 23 times revenue. Which is a very, very high valuation. So I think that tells you everything you need to know about, the state of the market at the moment, where they're turning down an offer.
Yeah, I was going to say, but Hamish, remember that most businesses are able to IPO at infinity times revenue. So don't forget that.
Yeah, that's right. Yeah, 23 times revenue, not excessive at all. Not excessive at all.
No. Because they make money. Yeah, they make money. Wiz, don't they? Did we talk about that last week? I can't even remember.
I don't know if they included that in the article. I think they only have mentioned, because they're still a private business and they are nowhere near IPO yet. So I don't think we actually know. But yeah, they've said that they're doing $1 billion in annual recurring revenue.
Well, I hope they make absolutely no net income if they're going to IPO. So just to, obviously for the best possible valuation. Yeah, I hope that they're definitely not profitable. In fact, I hope they're deeply unprofitable. I like those guys. I hope they're deeply unprofitable.
It's like that.
Good luck for their IPO.
It's like that joke that it's better to be pre-revenue than to have revenue, because then there's no growth expectation.
Yeah, exactly. So stupid, man. Financial markets are so dumb sometimes. Yeah. But you gotta love it. It's at least it's funny to talk about. Yeah. Makes for good television.
Yeah, it's funny to talk about. And then just lastly on the conference call, I listened to it on like 2x speed, and it was a lot of AI this, AI that, which is unfortunately all you really get from particularly from Google. Google's conference calls have just become an AI fest, basically saying absolutely nothing. Yeah. Talking about Gemini and all of their products, and I don't know, maybe to some people that's interesting, but to me it's just a whole lot of fluff. and
Yeah.
and
It's definitely fluff.
it doesn't get me too excited hearing them use all their fancy new AI words. And then they spoke a little bit about YouTube, and it was mostly about their kind of TV viewership of YouTube, which has gone up 130% year over year, which they're talking a lot about. And they said they're investing a lot of money into expanding shopping on YouTube. And they spoke about that for about 5 minutes. And all I could think was, how about you just fix the comment section? How about we do that? How about you stop putting a product in front of me?
Oh, man.
And we just fix the comment section.
It's so true. I got to be careful because obviously I love YouTube. It's, we spend so much time on it. Overall, we love it. And I think that's why it makes us so frustrated sometimes, because we do genuinely care.
Yeah.
If we didn't care, we wouldn't get frustrated. But there's so many things that they need to fix, particularly spam bots in the comment section. Like, the comment section is almost useless these days.
Yeah.
Which is terrible because you totally lose your sense of community. I'm trying to make more Instagram content now and get people to come over and join me on Instagram because I like that sense of community, because there's just less spam over there. People
True.
talk in the comments and I talk back to people. Like, people can send me messages and stuff and I talk back to them. It's just,
Yep.
yeah, for such a big company with so many resources, with so much money, it's crazy how slow they move and how many things are still broken.
Yeah.
Like, even the A/B testing of thumbnails, that is a massive, or ABC testing in the case of the feature they rolled out. That is a massive win for everyone. It's better for creators. It's better for YouTube, because YouTube tests and goes with the more engaging thumbnail, which means more people are going to click on it, which means more people are going to watch YouTube. It's genius all around. And it's taken them years to even try and do something about it. And then once they started doing the beta, years to actually get everyone on board. So,
Yeah.
anyway, rant over.
Yeah.
Sorry,
No,
Hamish. Derailed that completely.
It is crazy.
But it's wild.
Well, the crazy thing to
Yeah.
think about, and this goes back to what we were talking about earlier about how disconnected some of these companies are, they could literally drop $1 billion on the comment section, fixing the comment section, $1 billion, and it wouldn't even make a dent
Yeah.
to their cash.
Drop in the bucket.
Like, obviously that'd be excessive, but that's how insanely disconnected
could
these
do it,
companies
though.
are. Is they could allocate tens of millions of dollars, and no one would even notice. It'd be a rounding error, and they just don't do it, which is crazy. But anyway, good on them.
Yeah. Dude, we could do a whole podcast on that, I swear.
Oh, yeah.
We could just absolutely rip YouTube a new one.
Yeah. Yeah, they've got some.
Anyway, sorry about that.
They got some problems, but
Back on
anyway,
track.
but yeah, anyway, stock was down 5%, so
All right.
we got him.
Yeah, take that.
Yeah.
Let's send them down another 5%. Yeah. Anyway, there you go.
There you go.
All right, is that all we got for Google earnings?
Yeah, tell us about the Olympics. What's going on? I haven't paid any attention to the Olympics. I didn't really know it was on until very recently, to be honest.
Yeah.
So what's been
Me
happening?
neither. I'm not someone that really pays much attention to the Olympics. I don't find it particularly interesting, must be said.
Yeah.
Like, maybe I'll watch the highlights of the highlights, it only goes for 10 seconds. I was going to say the highlights of the 100-meter final. I was like, imagine the highlights. They just have the first second and like the last second. But anyway, no, I just don't. I'm just not interested in someone, I don't know, like kayaking or canoeing or someone trying to shoot a clay pigeon or something like that. I'm just not interested.
Yeah, I like watching the athletics. I think that's I like the track events. I mean,
Yeah,
but yeah, a lot of I don't have kind of a broad interest in all of the different sports that they show. Yeah.
Well, Hamish, it turns out a lot of people might be agreeing with us because it says here that the number of unwanted Paris Olympics tickets available for resale has hit more than 250,000 as lack of demand increases concerns just days before Friday's opening ceremony that many athletes will compete against a backdrop of empty seats. So the number of listings rose to 271,637. On Tuesday, up from about 180,000 a month ago. A Financial Times analysis of the official resale site shows. The most expensive offers on the resale site are for the opening ceremony, with best seats priced at €2,970.
Whoa.
€2,970.
Yeah.
Fans wanting to attend the Summer Games were obliged to buy blocks of tickets for 3 separate events during the first wave of sales. So I think they had to buy 3 separate events to get their tickets. Organisers said any unwanted tickets could then be resold through the official channel. However, a lack of demand in the secondary market has left many holding tickets that they cannot sell, with organisers, while organisers have continued to release more tickets. So there's just this glut of people that have, through this ticketing process, I think they've had to buy tickets to secure some tickets. They have to buy tickets to other stuff. And then they were promised that they could just sell the ones that you don't want. And now they've got them, they've paid for them, but they can't sell them because no one wants them.
Yeah, that's weird. It's weird they'd make them do that. You have to buy 3 blocks of different events. That's strange. No.
Yeah. Tickets must be sold at face value, but buyers must pay an additional 10% booking fee, while sellers are hit with a 5% charge. So this is a bit of a money-making scheme, I think.
Well, if it was, it was MasterCard, it would have been a 10% booking fee, 5% MasterCard fee.
Ticketmaster.
Yeah, Ticketmaster. Yeah, sorry, if it was Ticketmaster, you'd have like 10 fees on there. So 10 cents isn't, it's
the fee.
Yeah, the fee, yeah.
Oh dear, it's pretty funny. Some Reddit users have complained about being unable to find buyers for their unwanted tickets. Quote, "There are so many athletics tickets on the resale platform," wrote one user. Quote, "I'm feeling bummed that I might be stuck with good tickets. At this point, it's a sunk cost," end quote. But that's not the way the organisers are seeing it, Hamish. Paris 2024 said its approach to ticket sales had been a major success, pointing to the 8.85 million sold or allocated, an Olympic record. Yeah, it's sold or allocated because you forced them to buy it, and now they're all trying to sell it, but they can't. Of course, people have bought these tickets. About 250,000 tickets have been exchanged via the resale site, the organisers added. However, Tony Estongue, chief executive of the Paris Organising Committee, said on Sunday that there were still hundreds of thousands of unsold tickets available, in addition to those listed on official resale sites. On the official resale site. For example, fans can still buy tickets for prestige events such as the men's 100 metres final, starting at €295. That's $500 Hamish, to go to the men's 100 final. That's $500.
Insane.
That is wild. And that's for a restricted view. And then it rises to €980, which is about $1,600 for Category A seats, which I think are the best seats.
Wait,
prime
what
seats.
does restricted view mean? Like, does that just mean like far away or obstructed?
I think it's either.
You can't
I don't think it's far away. I think because normally sometimes there are like support struts, or there's like guard railings at. If you're on a second tier, it's like if you're sat in the row with the guardrail in front of you, or if there's a pillar or something.
That's crazy. Insane.
But yeah, I cannot believe how expensive these tickets are. There's just no part of me, and granted, I'm not the right. I don't find the Olympics very interesting, but there's no part of me that would pay $1,400 to go and watch 10 or 12 dudes run 100 meters.
No.
It's just no way. I think about, you could buy a new phone for that.
True.
Wild.
And then you can watch every 100 meter sprint there's ever been on YouTube.
Crazy. That's just wild. I've lost my spot, sorry. Okay. Where are we? There's also Friday night's opening ceremony tickets. There's still tickets available for that. There's about 4,000 tickets available, beginning at €900, so 1,400 Australian dollars, to go and see the opening ceremony. So if you want. It's kind of interesting, though. They're apparently going to go on some boats down the River Seine in front of a planned audience of around 320,000 spectators. It's going to be a lot of people.
Lovely.
There. To the opening ceremony, at least. We'll see about the other events. Although organisers expect 15 million visitors during the Games, hotels and apartment owners looking to capitalise on the Olympic demand have already been forced to temper their expectations. Many began lowering prices earlier this year to drum up bookings, while airlines have warned that the Games had suppressed the usual summer appetite for holiday trips to the French capital. Meanwhile, millions of Parisians are expected to flee the city during the Games, so they're getting out. The locals are like, no way, I ain't dealing with this. They're going on holidays elsewhere. And I think it's really interesting. I think this is kind of why most countries don't even bother putting in a bid for the Olympics anymore, because it seems like for the amount of cost associated, it's just such a massive risk. For example, if you can't sell tickets, it's like a complete disaster. So if you don't book out the hotels and you don't sell the tickets and you don't get that tourism revenue, it seems like it's a total waste of time.
Yeah.
And that's led to a lot of people now wondering like if the Olympics will even survive.
Yeah.
Which is kind of wild.
Yeah, I watched a great video on that specific topic by, I think it was Search Party, I think is the YouTube channel that kind of investigated it. And looked at, I think the only profitable Olympics event in kind of modern, in the last 100 years was the Los Angeles one in the 80s. But every other Olympic event is deeply unprofitable for the host city. And then, the outliers are, or the worst offenders was China spent $45 billion for the Beijing Olympics. And I think Russia spent something like $50 billion for one of the Winter Olympics recently. So it's insanely expensive, and it just there's no return on investment. And then you have all of these stadiums in a lot of cases that you don't have enough events to fill the stadiums that you build specifically for the Olympics. That particularly happens in places like Rio, for example. So it's not exactly it's clear what the future of the Olympics is at the moment.
2004, the Olympics had 11 bidders. 2008 had 10 bidders. 2012, 9 bidders. 2016, 7 bidders. 2020, 6 bidders. Can you see a trend happening here, Hamish? Yeah. 2024 had just 5 bidders, with 2 left at the time of the vote. So what they did is they actually decided to just give Paris 2024 and LA 2028 so you could just lock it in, because they're just worried that there's just not going to be any bidders.
Yeah. Yeah. And was it Brisbane,
crazy.
I think?
I think they've actually changed the bidding process. Yeah, now. Yeah, Brisbane's got 2032. Yeah. I think they've actually changed the bidding process now, because it's so unlikely that people are going to put their hand up and say, hey, can we host the Olympics?
Yeah, it's going to be interesting to see what they do. I think in that Search Party video I was watching as well, they spoke about how there was a decline in bidders as well leading up to the Los Angeles Olympics, and then because it was profitable, it actually revived an interest in what people wanting to host it. So maybe this is just that part of the cycle. Maybe we're going to see countries spend a little bit less on the Olympics and use a bit more of the resources that they have, and then maybe there'll be a revival. But it's certainly been in decline for the last decade or so.
So personally, I'm not going to be watching the Olympics intently, but I'm going to be watching the economics of the Olympics quite closely, because I think it's a really interesting economic event that happens. It just takes a lot of cost, and it's interesting to see how little it actually does for the host country. So very interesting. Anyway, that's all I had to talk about. You want to talk about you're talking about Tesla earnings. How is it you, not me, this time around? Wow.
Yeah, I know, right?
Okay.
Yeah, no, this is a change up. Well, usually Google, this is the other thing as well. Usually Google and Meta both report on the same day. So usually we both have one to go back and forth on. But Meta moved their date. So we can't do that anymore. So we don't have that. So that's the first change.
It's thrown us off.
Yeah, so now I'm also doing Tesla earnings. But no, I don't really I don't really follow Tesla all that closely, so I don't have a huge amount to kind of dive into here. I haven't listened to the conference call. I just kind of looked through some different articles to see what was happening, and I wanted to cover it because the stock was down 12%. So I thought maybe I should take a peek at what happened. Revenue came in at $25.5 billion, which was up 2% year over year. but it's a little deceiving because if you separate it out, their automotive revenue came in at 19.9 billion, which was down 7% year over year. So that's not surprising, I think, with the fact that production and deliveries were in decline, and we spoke about that, I think, a couple of weeks ago. You probably would have spoken about that, and yeah, it seems to kind of reflect their continued efforts to kind of slash prices as it kind of faces slower sales.
Yep.
And then also this kind of long-term threat, I guess, of rising competition from China's EV companies.
Yeah, definitely.
But with that said, they are still the top seller of EVs in the US by a large margin. So that's one margin that's good for Tesla. Another one that's not good for them is the operating margin.
Zing!
I was like, how am I going to transition this?
You were working on that one for a while, weren't you?
No, I just came up with that on the spot. So the operating margin reached the lowest point in 3 years, 14.4% compared to 18.7%, which is, not unusual for an automotive company. They have a fairly considerable fixed costs. So when revenue goes down, usually their profits or their margins shrink, and therefore their profits go down at even a larger rate. Earnings per share came in at 52 cents for the quarter, which was actually quite a big miss from what was expected, which the markets were expecting 62 cents. That's essentially why it seems like that's why markets were not too happy with Tesla during the quarter. On the conference call, I didn't listen to it, but I was just reading through what was the headlines from the conference call in different articles. Musk said they're on track to deliver a new affordable car in the first half of 2025. And robotaxis were a big topic on the call. Musk said, as a quote, "I would be shocked if we can't do it next year." So is next year finally the year?
Is that a quote from 2020 or 2016 or 2021 or?
Exactly. Yeah. No, this is the prediction. All the other predictions that he's made over the years, we don't need to worry about those. This is the one that's going to be accurate.
I love the guy. I love Elon, but his predictions, his timelines, just not worth paying any attention to.
Yeah.
They're just not. It's funny because I would have thought at this point he now kind of understands that his timelines never work out. And I would have thought that, if you consistently know that you're at least 2 years off every time, would you start to would you start to sandbag your own expectations a little bit at this point?
Yeah.
Be like, robotaxi, maybe in 3 years from now.
Yeah.
And then it happens next year and they're like, they can surprise the upside. That's the classic idea with sandbagging. Why doesn't he just do that?
Yeah, he should just say
I never understand.
He should just say, robotaxis are coming in one Elon year. He should call them Elon years,
Yeah.
And then everybody knows that really means 5 years.
Yeah.
What do you think the chance of there being robotaxis next year? Do you reckon that's going to be a thing?
I think there's a chance of a few being tested.
Okay.
In one state next year.
Yeah.
Or on closed circuits or something
in a car park. No. Yeah.
Yeah, something like that. Because Elon's spoken about this many times. There needs to be a few states I think are okay with the whole self-driving.
Yeah.
But most are not, and most countries are still not quite on board. So there needs to be a few robotaxis in a few locations for it to start building steam for regulators to be like, okay, these robotaxis are actually coming. I don't buy into what some of the Tesla hype boys on YouTube kind of talk about, where it's like, oh my God, there's going to be 1 million robotaxis on the road in 2 years. It's just not going to happen. It's because there's regulatory involvement. There's Tesla's production ramp. There's going to be all sorts of challenges. This is going to be a long-term project. But I wouldn't be surprised when he says, I can't be shocked if we can't do it next year. Maybe they can do it next year, but there's still not one on the road. I think that's probably more likely. Like, oh, we've got this car ready and it works in our parking lot, but now
Yes.
the challenge comes to getting it out there. I don't know.
I'd agree with that. Yeah. Yeah. That's what I would say.
Yeah, so there you go. But yeah, stock down 12%. Oof.
Yeah, ouch.
Oof. Yeah, that hurts. That hurts my portfolio. You know what's crazy, Hamish?
Yeah.
I haven't looked at my portfolio in months.
Yeah.
Actually, though,
Yeah.
I think I think I'm like proud of myself for that.
Yeah,
though.
that's pretty healthy.
I think that's actually a good sign. I haven't looked. I don't know. I mean, I know it's in there. But
Yeah.
I haven't looked at it. I mean, I keep up to date with the companies that are in
Yes.
there, but I wouldn't know what my returns are currently. I think that's a good sign, actually, for my long term. I know a lot of people would say the opposite. Oh, you got to crunch the numbers every day, but I don't know. I feel from a behavioral perspective, it's quite good if you're not looking at your portfolio. Do you check your portfolio often?
No, not really. Maybe like every other week I'll look at it. But yeah, you don't really need to. I mean, I haven't besides index funds, like adding index funds to the portfolio, I haven't bought or sold any shares since 2022, I think.
Last year?
No,
Yeah.
2022.
That was your Netflix.
Yeah.
Oh, yes, sorry.
Yeah.
Yeah.
And so no, yeah, was it 2022? Maybe it was early 2023. But yeah, I haven't.
It's whenever that massive dip in Netflix stock was.
Yeah, exactly. I think it was 2022. But yeah, I haven't traded
you'd be up a lot.
individual shares in a very long time. My portfolio doesn't really change, so yeah, you don't really need to look. You just have to stay up to date with the companies.
Dude, your Netflix shares would be doing real well for you right now. Whew.
Yeah,
Because you got in like quite low down on that drop, didn't you?
yeah, that's definitely been by far my best pick ever. Yeah, I think my average was maybe like 220 a share or something like that. It's almost at
Wow, $220 a share.
yeah. That was
They're at $635.
yeah. So that was a good one.
Yep.
But let's just hope this tech sell-off doesn't continue because it's gonna be a painful ride down.
Oh no, that's the thing. Value investing. I know that the statistics say that value investing, Warren Buffett style investing, doesn't work for most people. Most people lose money. I know that the statistics say that, but it shows you that the reason that most people lose money is because of the temperament. It's not to knock the strategy. The strategy does work. And I think we've both been good examples of even, we're no experts. We do our due diligence on these stocks, but we're no experts. And even we can prove that with the right temperament, this strategy can work. So it's very, very interesting.
Yeah, 100%.
But yeah. With that said, I think we're starting to ramble. Should we wrap things up, Hamish?
Yeah. Let's wrap it up.
All right, perfect. Well, thanks very much for joining me, mate. That was a good episode. We spoke about a lot of stuff. There's quite a bit going on this week. So thanks as always for joining me, mate.
Worries.
Hope you have a good rest of your week. And I hope you guys at home enjoyed listening. And I hope you guys have a good weekend. And with that said, we will see you guys next week.
See you guys.